Hey everyone, Couch Investor back to another video for today. So let's talk about Disney's earnings report. Now, earnings per share were in line, revenue a small miss, and then also a small miss on subscribers. But on the subscriber side, the Disney Plus platform, there is some good news. It is losing less money today than it was before. So hey, some improvements there. Overall, the company is still benefiting a lot from the parks. The parks are really just pulling all the company forward. Of course, during the pandemic, that's the part of the business that was not performing at all. That's normal. But since the reopening, that business, that side of the business was really showing its positive effect on the overall business. Now, at the time of making this video, the stock is down around 2% or something like that. With the way it is going currently, I believe the last time I checked, we had a PE of over 20 times, PE to growth ratio in the next 12 months of close to 3, I think it was 2.8 times or something like that. So it's not necessarily on the cheap-ish side right now. You would expect it to be a bit cheaper, right? Since it's Disney, huge company, still growing. So what's going on? Well, what's going on is that it has Disney Plus that has a negative effect on the business. Of course, over time, that should become a tailwind for the business. But right now, yes, it is weighing on its, let's see, earnings power. Now remember, later this year, dividend will come back, not as strong as before. In my opinion, it's just a bad move. It's just to please investors in the short term. I think they can use that cash and, well, invest a bit more in their own business because there's still a lot to do when it comes to Disney, especially with the parks. I mean, the prices of the parks, although it's most of the time sold out, being so expensive, you are pricing out a large part of your fan base. And now with the investments, of course, you can make, or I don't know, figure it out, make your parks maybe a bit more accessible, build maybe more parks, so you can have a bit more exposure as well. But we'll see what happens there. Of course, still no news with regards to the maybe potential ESPN spin-off. We've talked about this in the last earnings report. And then, of course, the speculation about Hulu, what happens with that. Currently, no news with regards to that, and I doubt they'll announce something crazy during the earnings call. So first up, let's start with a comment here. We're pleased with our accomplishments this quarter, including the improved financial performance of our streaming business, which reflect the strategic changes we've been making throughout the company to realign Disney for sustained growth and success. From movies to television to sport, news, and our theme parks, we continue to deliver for customers while establishing a more efficient, coordinated, and streamlined approach to our operations. And of course, I know some of you might ask questions with regards to what's happening in Florida. I won't comment on that, and I don't think we're going to get more information during the earnings call. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So, let's have a look here. So revenue increased 13% year over year to $21.81 billion. Total segment operating income is actually decreasing here 11% to $3.28 billion. Now, as for the rest, of course, net income from continuing operations, we've seen this in the past couple of quarters, huge increase year over year. Cash provided by continuing operations and free cash flow have increased as well substantially year over year. So that's nice to see. Of course, this should happen, especially when you are planning to pay out a dividend. If this was not the case, then I don't see why they would have been paying now, or why they would announce that the dividend is coming back later this year. But this is a big positive in my opinion. Now, as we continue here, we can clearly see again Disney Parks, experiences, and products increasing more than the rest, so 17% growth there. When you look at Disney Media and Entertainment Distribution, that only grew 3% year over year, so overall segment revenue, 8% growth there. Operating income, same story there. Disney Parks, 23% growth year over year. And now if you look at Disney Media, Entertainment, and Distribution, you can see here decreasing 42% year over year to just $1.1 billion. And you can see here a bit why. So linear networks, that's the one that decreased here 7%, while direct to consumer increased 12%. Content sales, licensing, and others increased 18%. Overall, we've seen a 3% growth year over year to just over $14 billion. Then as for operating income or a loss, linear network, here you can see the big impact, decreased 35% year over year. As for direct to consumer, still a loss here, $658 million, but an increase towards profitability by 26% year over year. And by the way, this shouldn't surprise you at all. We all know that linear is going away. Everything is going to go to streaming, so the picture here should not really be surprising. And so moving on to the streaming platform, the paid subscribers. So Disney Plus, domestic US and Canada, that decreased just 1%, not a big change there. Internationally, that's excluding Hotstar, that grew 2%. Now Disney Plus, the core, increased 1% overall. If you look at Hotstar, that actually decreased 8% for this quarter, year over year actually. And Disney Plus as a whole decreased 2%. This is the second quarter in a row where we see a decrease there. So not the right way you want to go, but there is a positive thing I'll touch on in a bit. ESPN Plus saw an increase of 2% year over year. As for Hulu, SVOD only basically flat. Live TV plus SVOD decreased 2% there. So totally Hulu basically flat for this quarter. But when you look at average monthly revenue per paid subscribers, you can see here some improvements. So domestically in US and Canada, that increased 20% year over year to $7.40 here. They say this is due to an increase in average retail pricing. This was bound to happen, so I'm not surprised. Internationally, that also grew 6%. So Disney Plus core increased 12%. As for Hotstar, again, very bad when it comes to monetization and still decreasing here 20%. Globally, Disney Plus increased 13%, so that's nice, and that's also why we see profitability of the business becoming a bit better. Although it's still a loss, it is much better than before. As for ESPN Plus, we saw an increase of 2% year over year. Hulu SVOD only decreased 6%, Live TV and SVOD increased 5%. Now that decrease at Hulu SVOD is due to lower per subscriber advertising revenue and a higher mix of subscribers to multi-product offerings, partially offset by an increase in average retail pricing, of course, with the overall advertising market being down a bit. Again, not surprised there. By the way, talking about advertising, The Trade Desk also reported earnings, as always, a nice little beat, solid quarter. I might cover that on the channel later on. Now, before I conclude this video, as for the stock itself, as you can see here, we tried to go, and when we touched the 200-day moving average, got rejected there. Right now, after hours, the stock is down around 2%, so we're back down at $98 or so. Remains to be seen what happens during the earnings call. If something crazy is announced, I'll make sure to pin it in the comments down below. But currently, if it stays like this, we're going to open below the 20, the 50, and the 200-day moving average. As for the RSI, pretty neutral there. MACD currently a bit bullish still. And so that will be it for this video. Of course, nothing really special with this quarter when it comes to Disney. A neutral quarter, I would call this, and that's why the stock being only down 2% is fine, right? They missed a bit on the subscriber numbers, they missed a bit on revenue, but that's about it, right? That's about it. It's nice to see. I think the market likes to see that the streaming platform is becoming a bit more profitable. Let's see if that can continue in the next coming quarters. Of course, do share your thoughts down in the comments below. And yes, we might probably see and will probably see in the next quarter some increase when it comes to parks, since we're entering the summer months. It's usually one of the best quarters for the company. So remains to be seen what happens, but do share your thoughts down in the comments below. Are you adding? Do you have a position? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.